$100,000. It's 10 stacks of $10,000. And I remember the first time I had $100,000 in my bank account, and I remember seeing this FDIC insured thing with my bank account where they would basically insure my money up until a couple hundred grand. And I'm like, oh no, I'm almost halfway to the limit. What happens if I put more than that in my account and then someone defrauds me or someone steals it or someone hacks my account? Then I guess it's not insured. That doesn't seem like a really safe place to put my money. And so I started asking, well, I'm not really like crazy wealthy yet. I'm now a millionaire. I wonder where multimillionaires put their money. And so I started interviewing and asking around, and sure enough, I learned that there's a special type of whole life policy. And it's not something many people know about because it has to be designed in a particular manner where I can put this in and have immediate access if I want to pull it back out so that I can earn money in multiple ways and pick up all the benefits that we talked about before. So I learned this strategy about 15 years ago, and now I have several of these bank accounts. Every year I start a new one. I keep dumping money into them. And then when it comes time to transact business or buy an investment property, I've got a place where I've stashed my cash. And right now I feel like I am getting banks at their own game. I feel like I'm playing the banking game. I feel like I'm winning. And if I could show you a way to win for free like that, wouldn't you want to?
Well, I can show you exactly how to win just like that. Now, this strategy is most beneficial if you are a business owner, you're into real estate, or you're a high income earner. Now, typically, most business owners take their money and they leave it in a traditional bank account. Now, to use this strategy, you take the same 100,000 and you move it into a life insurance company, specifically a mutual whole life company, because that is the only type of company that allows you to put in money and then take it out within 30 days. Now, in this example, what we typically do for our clients is what we call a 90-10 split, meaning 90% of the 100,000 goes towards cash value, 10% towards the death benefit. So let's say that you got the money in there now and you decided to take out a loan of $80,000 within 30 days. Well, that loan is going to come with an interest rate, assuming 5.5% interest. Now, technically, this is the insurance company's money, not your money. So your money is still with the company earning what we call uninterrupted compound interest. So amortization interest is what you pay on your loan. So let's say it took you 10 years to pay off the 80,000. You would have paid a total of $104,000 and some change. Within the same 10 years of your $80,000 earning 6%, you've earned a total of $143,000. That is a profit of $63,000 on top of your 80 within 10 years. Now, when you subtract the interest rate from your profit, you just netted over $39,000 by simply using the insurance company's money, while at the same time, your business is still generating profit on an annual basis. This is how wealthy people and smart business owners leverage life insurance contracts to become richer.